Okay, 12631, it's Chess and Wine here. It is Monday, November 15, 2010, the middle of the trading day here. I just want to do a video just kind of showing you what I look at during the day. This is the SPY. It's the actively traded ETF for the S&P 500. So during the day, you can look at price and volume here. Whereas with the S&P 500 during the day, keep in mind the S&P 500 itself is not traded. It's an index. So it's great to look at the end of the trading day afterwards, like I do every day. But intraday, if you kind of want to feel for how the market is being traded as a whole, I think the SPY is a pretty good thing to look at just to kind of gauge it. I mean, here's a 1 minute chart that I'm looking at, so keep that in mind when you see these moving averages of the SPY. But I think, it's just to analyze what's going on today. I mean, obviously, I know we're in the green, but as I've noted in a couple of posts that I've done today, it's kind of a lethargic up day in the markets. You can see we had a nice surge up here around noon. Actually on increasing volume, again, on a very short-term time frame. This is a 3-minute chart here you're looking at. So this is all intraday for today, Monday. And I think we ran into some resistance up here, and what I suspect that was some profit taking from people who got scared on Friday, because Friday was the first day in a long time that we've seen some fear come back into the market. And you can see, this is a pretty nice spike up here on buying volume, but you got to take it with a grain of salt, because again, this is a very short-term time frame here. If we can take out today's highs right around here, 121.05, something like that, on the SPY ETF, that probably would equate to like 1207 or something, 1208 on the S&P 500, maybe 1210. If we can move above that, that might be, I think, a reason to get a little more aggressive. But I think for now, I'm expecting us to do a little more consolidation, kind of letting the dust settle on a day like today. Overall, to look at the SPY, I mean, this is very similar, obviously, to the S&P 500. Pulled back to the 20-day moving average here. Right around here, and now we have a nice bounce today, although I think it's a little too soon to declare that this is the bounce leading us to the next charge higher. So that's why like I said in the earlier post, I do have a heavy cash position. I sold out of some names today. Netflix was a great looking setup coming into today, but as the facts change, I think so do our opinions. And you can see here this pink support trend line is looking very vulnerable all of a sudden here. I was expecting this triangle to kind of tighten up and then resolve up. But, as you can see, this 20-day moving average is looking in jeopardy. And in general, that doesn't mean that Netflix is finished. I mean, Netflix is still a very healthy overall stock. And I want to emphasize that point. You can see this volume pattern. It's still very bullish. However, like I said, we're individual traders here. We're individual investors. There's no reason for us to feel compelled to have to just ride it out and just take losses. Netflix, to me, looks like it could easily come down to this 50-day moving average at 160. So as an individual trader, like I said in the post today on 12631, instead of feeling like we always have to bite the bullet and take our huge lumps, instead of that, why not sell here if it looks like this 20-day moving average is vulnerable, and then buy it back down here later on? That'd be entirely healthy within the broad context of an uptrend. But what it is me in the short term trying to practice very sound risk management principles. Now, because of that, a consequence of that is that sometimes I might miss out on this big move up. However, I feel like I would have enjoyed this big move up if we hadn't seen the weakness today. So I'm willing, if that makes any sense, I'm willing to kind of give that trade-off in the interest of risk management. And the same thing with Amazon. I mean, Amazon's, it could easily come down to the 50-day, and there's no guarantee that the 50-day moving average has to hold. It could come a little bit below it too before it stabilizes. There's just no reason. You look at the broader chart here. I thought Amazon was very constructive up here, where I bought it right around here. But ever since it started weakening, there's really no reason for me to be a hero and stay in it. You can see it's the first time the 20-day has really given way throughout this whole uptrend. So I think, on the whole, like I said, to look at the S&P 500, not a bad day today, but let's let things dust settle a little bit more first.